I noticed the company in 2012 just the same day that everyone else did, the day that video went viral.
What was so fascinating about this company wasn't necessarily the product. What got us all paying attention back in the day was this crazy YouTube video.
It's this close-up shot and he says, "Hi, I'm Mike, CEO of Dollar Shave Club."
What is DollarShaveClub.com? Well, for $1 a month, we send high-quality razors right to your door. Yeah, $1. Are the blades any good? No. Our blades are f***ing great.
A bunch of great humor, but he focused on price and convenience. And I think what he knew is that razors are expensive and they're inconvenient to buy. Guys don't like to go shopping. They lock down these razors in the razor fortresses, make them really hard to get out. And he just went at that sort of slice of life humor.
We've seen these e-commerce companies over the last year. Some have done well, some haven't done well. But this idea that you could build a brand and you could build it on the internet. You didn't need to have a physical space to build a company. That was unique years ago.
So what's happened in the last 5 years? Well, all of our attention went from TV and radio and newspapers to the internet, mobile phones, and people are going to stores much less. Right? The foot traffic to retailers is down. It's been down for 4 or 5 years straight, and it's accelerating. And everyone's just gone to Amazon and online. So if you are a company that depends on TV advertising to build your brand and dominates store shelves in physical retail as a place for you to get to customers, you don't know your customers, and you're not good at social media. So you're kind of vulnerable in our mind. So our view is in the social world, every brand has to be a direct-to-consumer brand. And Unilever, recognizing that and buying Dollar Shave Club, I think is sort of the ringing of the bell of that realization.
Where do you think the state of retail is right now? Everything has changed. A lot of the big fashion chains are struggling. Everyone's trying to figure out e-commerce, and is this working, and is there a combination? As an investor, where do you think it sits?
I think physical retail of stores that sell largely other people's products are dead. It's over. Amazon is dominating. 50% of all incremental retail dollars spent online go to Amazon. With that happening, if you're a company that makes consumer products that are sold largely through those stores, you need to have a different story other than I'm dependent on Walmart and Target and Macy's and Walgreens.
So many times we have these moments where I'm sitting across from you in a company that you invested in first and you believed in has sold for $1 billion, but this is a rarity, right? This doesn't happen all the time. What role does failure play in your life and as a venture capitalist, and also as you see for entrepreneurs?
It's a learning experience, right? We look at failure as data. What mistakes did I make? What could I have done differently? And fortunately, as a venture capitalist, we have a portfolio of investments and we expect a bunch to fail. So I've made plenty of mistakes. I've invested in people that actually weren't that good. I've picked markets that are really hard, that have too much friction in them to make a sale. So you look for these places to learn.